ideally it's smart money that's coming with the the human capital coming with the financial capital. So with crowdfunding, it certainly democratizes access to investment, but it's not necessarily going to be the best for the entrepreneurs. But there's advantages and disadvantages to everything, and certainly I've seen a lot of successful equity crowd fund raises on these platforms, and I actually got started in angel investing through crowdfunding before I ever made an angel investment. So certainly it's also a path for angel investors to get their feet wet and not invest $25,000 right off the bat.
Right.
100 or 1,000 or whatever.
Welcome to the Veg Ready Vegan Hero Series. And today we're lucky to have Alicia Robb join us. And I'll be asking her to tell us about a couple of different initiatives that are related, but they're very interesting. And so I'm looking forward to learning with all of you. And the first one is the veganinvestors.com group, which is an initiative of her exciting Next Wave Fund, which is also the name of her book, The Next Wave. So we want to hear all about these. And then in case there's anyone on our blog list that doesn't know your background, maybe give us a couple of minutes of who and how and your pathway, because I wouldn't even be able to recount. You have done so many things in so many places in the world with so many great organizations. Maybe you'll save me the embarrassment of doing a bad job and give us a little update on Alicia Robb.
Well, thanks, Mark. It's great to be here. A quick summary of me. I run Next Wave Impact, which is an early stage venture fund. We do impact investing in early stage companies. I got into venture capital in a kind of a different way than the traditional path. I'm actually an economist by training. I got my PhD in economics, but focused on entrepreneurship and entrepreneurial finance.
And that was with the Kauffman. You were with the Kauffman Foundation for a long time.
I was, yeah. I started at the Federal Reserve Board of Governors in the Greenspan days doing small business financing. And then I moved to the Kauffman Foundation to do entrepreneurial finance, which is where I got into research and policy around crowdfunding and angel investing and venture capital. And then, I wrote this Next Wave book, which is looking at the financing gaps and strategies for high growth women-owned businesses. But as part of that book, we also looked at the gender gap on the investor side of the equation. So why do we see so few women and people of color on the investor side of the equation? And really there's women get less than 3% of venture capital, minorities get less than 1%. And it's really because in one part due to the fact that most of the people on the funding side are white men and they like to fund white men. So our goal at Next Wave is really to diversify and create a more inclusive ecosystem by investing in women and people of color, but also by training a new wave of women and people of color that are investors.
I'm gonna ask you about Rising Tide and that whole program of training, but let's just back up for 1 second. Besides the fact that it's fairer to be more inclusive, there's evidence that it actually produces better returns. Is this correct?
There is. I mean, there's not great data, but certainly there's evidence provided by various research projects that show more diverse teams do better. Venture capital funds with more diverse leadership do better. Companies with more diverse boards do better. So there is evidence that yes, more diverse and inclusive environments create better options.
I was listening to one of Jason Calacanis's podcast. He does a great podcast. I'm sure you know it, Twist, This Week in Startups. And he was talking that the performance of companies with executive level women is significantly better in the long term from early stage through to exit. So they have better exits and they have better longevity. So it might be that a woman-led or women-influenced team has something that gives staying power and more consistent success, whereas without that, you might go like that. You might have the crash pattern. You might have the quick hit and the crash after.
Well, and we're also more capital efficient. So, I mean, there's a lot of reasons why to invest in more diverse teams. But the fact is, with 97% of the venture capital going to white men, we see it as an investment opportunity to fund these underrepresented entrepreneurs, because good ideas come from everywhere and from everyone. They don't come from just white men in Silicon Valley. So,
Your point was so exemplified by Dave from 500 Startups. Somebody was interviewing, I think it was Jason Calacanis was interviewing him about his inclusivity and his aggressively seeking people of color to fund early stage startups and women. And he said, I'm not doing it because it's the right thing to do. I'm doing it because they're underpriced assets.
they are indeed, but it is also the right thing to do. And if we want to create a more
And the right
inclusive
thing.
and just society, we need to make sure that all good ideas get funded.
Yeah. Now, I read that the vegan angel investor group called veganinvestors.com, if you don't mind me mentioning it, I read that came as an initiative from the next wave. I thought it was the other way around. Tell us about that.
Yeah, actually, I would love to have a vegan venture fund, but right now we're just impact more generally, so we're sector agnostic. We do have a vegan company in our portfolio, but it's not our main focus. So I really spend more of my angel investment money into going into vegan companies, and not just that, but vegan-led vegan companies. And so I really wanted to focus more of my efforts around that. But I mean, the difference between a angel investor and a venture capitalist are, the angel invests their own money and a venture capital company invests the other people's money. So with my own money, I'm much more focused on vegan investments, and that's why I wanted to do a vegan investor syndicate so that I could co-invest with other people like me that really wanted to invest in vegan-led vegan companies.
And so would it be a fair statement that the fund will invest in later stage and the angel group will invest in earlier stage? Would that be?
So Vegan Investors is really focusing on pre-seed and seed stage investments, and next wave is seed and Series A, so a little later stage.
Great. And then also for people that are listening, they're probably aware, but just to clarify, a fund has managed money and accredited investors only. The angel group has individuals and they're all accredited also, but is it managed money or do they make their own investment decisions each deal by deal?
Everybody makes their own investment decisions deal by deal. So we just had actually 2 companies present yesterday, and people who want to invest will make their own decisions about investing. Now, the other reason we started Vegan Angel or veganinvestors.com is because a lot of times when companies are raising funds, the minimum investment is $50K or $100K. And for angel investors, our check sizes can be typically a lot smaller. I know mine are. So with vegan investors, we actually aggregate individual investments of 5K to 25K into special purpose vehicles to meet then those minimum thresholds of those companies to invest in them. So by combining a bunch of smaller investments into one larger investment that's in their cap table, that's on their cap table, it just makes it a much cleaner investment for the entrepreneurs and helps them keep their cap table clean.
Okay, so again, for our listeners, you use some terms which they may not be familiar with, so let's drill down. Let's explain a cap table clean. What does that mean?
Okay.
Are you using Clorox?
So let's say you have 100 investors and they all invest $5,000. That means your cap table actually shows the equity held by each individual investor. So you'd have 100 of those people on your cap table.
Long list, yeah.
It's a very long list. And when you go to raise your next round of financing and a venture capital company looks at that cap table, they'll be like, no, clean that up. And so by doing a special purpose vehicle, each of those 100 investors, well, the limit's 99. So each of those 99 investors could put in 5K, but that aggregate amount would be one investor on their cap table, even though that investment is made up of 99 people.
Right.
The investment is into a special purpose vehicle, which is an LLC. And so each of those individuals would have 1% of that LLC. But
So for entrepreneurs who are listening, what this means is if you haven't raised money yet, if you're about to raise money, you think in terms of either a group of investors in one line on your cap table, and the list might have eventually 5 lines, but they would be increasing rounds, rather than having 100 lines with each a name and then a bunch more rounds. So it makes it easier to negotiate. It makes it easier to make a vote if there's a vote needed. I assume the special purpose vehicle has one person who speaks for the group. That's you. Yeah. So you act as that person. Okay. And then, so each deal has its own special purpose vehicle, and that's part of the SEC laws. And once again, for the point of view of investors, and this is also important for entrepreneurs to know, these laws require that all accredited investors, all are.
Well, actually, that's not true. You can have up to 35 non-accredited investors in your company, but they should be people with a previous relationship or known to you. And there's also some limits on the amount of money that a person can invest, just like in crowdfunding based on their income.
So that would be, if I recall, that's the requirement of a larger prospectus disclosure document. And that's why a lot of lawyers will advise entrepreneurs to stick with accrediteds if you can. But if it's your only option, if you don't know a lot of accrediteds and you need more money, then you do what you have to do as an entrepreneur. And then, so for the investors listening, can they learn about your fund and either join or request to be invited? How do they do that? Tell them how to.
Yeah, you just go to veganinvestors.com and there's a place to join. It's free, and then you'll get invited to our bi-monthly company presentations where we invite 2 companies to present. That's
great. And that's of course, they will declare their accredited status, and that'll be a requirement for them to participate. Okay, great. Oh, super. That's really nice. Now, let's contrast that with the fund, which is a different scenario. What's the size of the fund right now, or how do you see it going over the next couple of years? Funds usually have an investment life. You've talked about 2 phases, and then they have an exit life and a span. Why don't you explain a little bit of, that's so interesting to me. Why don't you explain that for listeners?
Oh, sure. So typically a venture capital fund's life is 10 years. The investment period is in the first few years. And then you expect to have some early exits, kind of recycle some of that money into investments later. But at the end of the day, after 10 years, you're expected to have liquidation to get your investors their money back. So our fund is structured a little bit differently because we're an angel fund. We grouped together 99 early stage angel investors, all women, and 25 of them women of color. Because again, our mission is really to diversify and create a more inclusive ecosystem, and also to train early stage investors. So it's a learning by doing fund where we have an investment committee of 9 that mentors and trains the early stage investors that are newer. And we're doing an investment period of about 3 years because it's a small fund. Everybody put in between $30,000 and $300,000. And so it's just under $5 million. So it's a micro fund. Our next fund is going to be 20 million, but again, that's tiny by, in the venture capital world. But what we're really trying to prove out are models that show things can be different. So we're trying to create new models and new structures that are creating a more inclusive ecosystem. So
you're actually going to be training your investors if they're not experienced. That's correct. An excellent thing to do. I mean, tell us more about that, because I've never even heard of any fund ever talking about that.
So we actually have a ton of free materials on our website, nextwaveimpact.com. There's nextwaveimpact.com. There's a investor.
We'll post that in our page. Yeah.
Our investor education page where there's webinars and short briefs and so forth. So if you have 5 minutes or 20 minutes or 60 minutes, you can look at all of these free materials that teach you about, cap tables, dilution, due diligence, you name it. But then the fund itself is learning by doing. So you participate through all of the processes of an investment from screening to due diligence to investment. So people can be as active as they like and volunteer for due diligence committees that are led by the investment committee members. So it's a way to really learn how to do it before you actually do it on your own, but also by investing in a fund, you're getting a diversified portfolio right off the bat. So the first thing you learn as an investor is that this early stage investing is a risky asset class. So you only want to put maybe 10% tops of your assets into this asset class. But within the asset class, you need to build a diversified portfolio.
Yeah.
And that's hard to do if you're doing 25 or 100K investments each investment. So by investing into a fund, you're going to get a diversified portfolio just because of the portfolio structure of the fund. So it's a great way to create a diversified portfolio. Learn by doing, get mentored, and honestly, it's a great group of women, and we have a lot of fun doing it. And there's a lot of advantages of investing in a group because we have 99 really high-powered women from all sectors, all geographies, and so we're able to invest in sectors and geographies in a way that most funds cannot. So we really like the model.
Yeah, it's very interesting. And so are your meetings all virtual, or do you have physical gatherings as well?
Yeah, we have all of our monthly meetings are virtual, but then once or twice a year we get together as a group nationally. And we're hoping to do more regional events with our next fund as well.
And how long has your fund been? When did you start your fund? When did you complete the raise? How much of it is deployed? Is there any names of companies that we know that you'd like to say you hold, or is that?
So our first investment we made was in October of 2017, and we just completed a follow-on investment in that company. We currently have 13 portfolio companies where we've made first stage investments, and we've made 3 follow-ons. Our target is actually 16 first stage investments and then follow on. So we have about 3 more to go, and then we'll just focus the rest of this fund on follow on. Yeah.
So for the listeners, you might make an investment, the company progresses, they want more money, they come back to you and they say, we're going to do another round. Do you want to double down? You look into their progress, or you've been following their progress, and you make a follow-on investment. That's the term we use. Excellent. Any surprises in the Alicia Robb world that we should all be watching for? You've done so much. I mean, it's really, the book is great. How long did that take to write? Is there something else in your future that we should be looking at or watching for?
Well, Next Wave was actually my 5th book, and I don't really have a book on the horizon yet, but someday I'll probably write another one. But they've all been co-authored with my amazing co-authors. I think what I'm really excited about now is really this idea of creating new models and structures. So one of the ways we're entrepreneur friendly is we do virtual pitches. We don't make the entrepreneurs fly to us because we have investors all over the country. We have on the ground presence in a lot of different places. So we don't make the entrepreneurs come to us. The other thing we want to look at in the new fund is really looking at the racial gap. Women, the gender gap is huge, but the racial gap is even bigger. And we really want to focus on the racial gap. And because of the wealth levels, differences in wealth levels, especially African-American and Latino founders don't have the networks of friends and family to really get them to the seed stage where funds like our current fund can invest. They're too early for us, but they never get the funding they need to get to that stage.
Yeah.
So our next fund is going to have a carve out for pre-seed investments into founders of color and really get them to the point where they're investable by regular seeds.
So actually that brings me to the last point that I wanted to hear your thoughts on. Crowdfunding. Do you see it? Where does it fit in your planning? And is it a solution for underfunded entrepreneurs who don't have their own network because they didn't go to Harvard or they didn't grow up a privileged white guy like me?
Yeah. Certainly there are advantages and disadvantages. So I am a huge fan of reward-based crowdfunding when it's used for pre-purchase models. I feel like you did this. it's a great way to show product market fit. More and more venture capitalists are asking for entrepreneurs to do crowdfunding to show that they have that product market fit. I'm a fan of debt crowdfunding because I think it's a way to pool investment money to allocate to entrepreneurs that are more Main Street types that aren't going to have exits.
Mm.
For equity crowdfunding, I'm on the fence. It's not ideal in the sense of, part of the reason why entrepreneurs want VC and angel money is because it comes with the human capital of the investors with it, and those people bring skills, networks, advising, mentoring, etc. So it's smart money that's coming with the human capital coming with the financial capital. So with crowdfunding, it certainly democratizes access to investment, but it's not necessarily going to be the best for the entrepreneurs. But there's advantages and disadvantages to everything, and certainly I've seen a lot of successful equity crowd fund raises on these platforms, and I actually got started in angel investing through crowdfunding before I ever made an angel investment. So certainly it's also a path for angel investors to get their feet wet and not invest $25,000 right off the bat,
Right.
100 or 1,000 or whatever. And so in that sense, it's
Yeah, and there's one more thing about that I'd like to ask you. So, in your next fund, as you focus on racial, what's the management going to look like? Because you're a white woman who's not as privileged as a white man in the ratio, but you're a very successful white woman who's been highly educated and great experience. And how do you intend to bring management in that looks more like the racial target you're trying to bring in equality to?
That is a great question, and something we're working really hard on. So we expect the investment committee to be 1/3 to 1/2 women of color.
Okay, great. Look forward to seeing results and learning and meeting. And the other thing that occurs to me as I listen to you talk, and you mentioned human capital coming with the money, you have an incredible network for your entrepreneurs to reach out to, and very motivated, because it's not just about the money. Your people are mission driven. And so they will be more likely to say, hey, I know someone who might join your team, or I know some introductions at one of your target enterprise firms that I can get you in the door. So I think you're really on you're really on the right track, a really great path to bring 99 motivated, forceful, powerful women to bear on a little company. It's going to be a huge lift. So looking forward to seeing that.
And I think the entrepreneurs are really looking for that as well, because our checks are relatively small, but they are actually wanting our investment because we come with the money.
Yeah, that's great. Well, thank you so much, Alicia. We're going to keep track, and we're going to read your book and watch your fund, and we're going to either join or follow your investor group, your angel investor group. We'll see what vegan companies come up, and maybe they'll be woman-led, and you might get into your next stage fund. That would be great, wouldn't it?
That would be great. Thank you, Mark. I really appreciate the opportunity to be with you today.
Thanks for everything you're doing. Great work. Bye-bye.
Bye.